Everyone to this week's Wednesday Lunch and Learn. This one was highly anticipated. We have a lot of folks that are out here wondering, what exactly are we supposed to do with our finances during these uncertain times? And so Michelle and I, taking your feedback and just trying to create the most helpful content that we can through this, we said we got to have a talk about finances. So we got Jatali and we've got Marlon, and they are experts in financial literacy and wealth advising, and they're going to talk to us and share some of their tips today. But first, we're going to do our intros as the guests. As you know, as you may or may not know, I'm Amber Lee Forrester. I'm the founder of Quartz Wellness. I'm a life, career, and business coach, and I'm passionate about helping to empower and uniting folks to thrive. My website is quartzwellnesscollective.com. That's where you can find me. And my partner in this is Michelle Brown. And Michelle, you want to speak about yourself for a minute?
Absolutely. I can't stop grinning. I'm looking across all these faces and I see people who I haven't seen in ages. So hey, hi everybody that I don't know, and welcome everyone that is new to joining us today. So as Amber mentioned, the name is Michelle Brown. For those of you who don't know me, my agency is Into Action Coaching. We are a full service executive coaching and talent management agency, in the sense that we aim to work with organizations to create and transform cultures where people want to come to work every day and not just for the compensation. So Amber and I put our heads together about a month or so ago, right as this pandemic really turned our lives upside down. And as coaches said, you know what can we do to offer support, insight and knowledge, and wrap our arms around anyone out there, given the topics that, I'm sure we're all grappling with. So we welcome you today, and I'll pass the mic back on to you, Amber.
Thank you, Michelle. Thank you. So Jatali and Marlon, we would love for you to take a couple minutes and just tell us about your expertise. You guys are both phenomenal. We learned so much just from the conversation we had preparing for this. So if you could just take a couple minutes to introduce yourselves to everyone. Jatali, we'll start with you.
Cheers, everyone. My name is Jatali Bellington. I am the founder of an organization named Kids Who Bank. We have a finance curriculum that's gone into 217 schools nationwide in the US and 5 outside of the country, in Africa, UK, Australia, the list continues. And I started with doing investment banking and then forensic accounting for major firms like Credit Suisse, First Boston, Gucci, Oscar de la Renta. Eventually, before I left, I was also Louis Vuitton was one of our clients. And I'm very passionate about finance. I believe that it should be a part of every dinner table conversation, and it should also be in all school curriculums, rather it's a private, public, charter school.
Thank you, Jatali. And Marlon, give us your intro, please, and tell us a bit about yourself.
Hi, Marlon Scott with Wealth Standard Financial in Houston, Texas. I started out in '05 with UBS Financial, then went to Bank of America Investments, which became Merrill Lynch. Spent 6 years at Merrill Lynch, 6 years at Ameriprise Financial, and now I am with Wealth Standard Financial. We are independent financial advisors. Our broker-dealer is LPL, which is the largest independent firm out there, larger than Raymond James, larger than Ameriprise. And as Jatali said, I too am passionate about financial planning, literacy, information, not just for, as she mentioned, kids, but grown-ups too. So looking forward to it. Thank you, Amber and Michelle, for inviting me. And I'm in Houston, so I've obviously got to learn East Coast versus Central time zone.
No worries. We're glad we got you on here. So we're going to just kick off with a question to you both. In our discussion today, we're going to cover investments, we're going to cover real estate, and we're going to get some tips from you. But right now, while we have you, doesn't everyone wish that they had like a financial expert that they could just dial up and say, what do we do? So I just want to start with that general question of like, what is your advice if you were to be speaking to family, friends, your loved ones? What is the the key advice that you would give them on how they should be handling their finances right now?
So one of the first things I would say is do not allow fear to cripple your future. And the reason why I say that is because a lot of my family members are in this position of fear because they feel like, okay, we have a crash. Is this going to be the next big recession, the Great Depression? How bad is it going to be? Is this going to be a situation where I'm going to, for the next 5 years, be completely broke? And so as I'm getting these kind of questions, you know, they're also saying, I'm pulling all my money out of the stock market. I'm going to stop investing. You know, I'm afraid. I already took a loss of 20% on this particular stock. And I am constantly telling them, don't jump too quickly. If you were going to pull out money, it should have been at the beginning. And then what some investors do, which is called shorts, where you pull out your money while the money is still high, while the stocks are still high. And then when they drop 20-30%, you reinvest and repurchase the stocks and then hold on to them until they go back up, especially the ones that you think will go back up. So if you haven't done that, two things I'm telling people are either leave it in if it's a company that you're confident will bounce back after this is over. Or if you're pulling it out, be sure to pull it out mindfully and try your best to reinvest what you honestly into companies that you feel, once again, will either do well short-term as stocks and long-term as stocks, and then explaining what that means. And beyond stocks, I have real estate friends and I do real estate and the list continues. So I'm getting all these fears and I'm telling people, don't forget this is a temporary point in our lifetime. So this might be for 1 year, might be for 2 years, but what is a 3, 4, 5 year end goal? Do you honestly feel like this economy will be crippled for 5 years? Because we've gone through something like this already in 2008, a lot of us. So we experienced a setback in 2008, but those who still invested wisely were the ones who came out aggressively on top and financially in a better position. And the people who were playing it completely safe, honestly, at the end of that equation, a lot of them, it was actually harder for them to bounce back. So that's one of the things that I've been noticing and I'm telling people during this time is not allowing fear to cripple them.
Thank you. Thank you. And I'm going to ask you quite a bit more about real estate and investment. So I know that people may have some questions around, just more detail on what you were saying. And so don't worry, guys, we're going to get into that. Marlon, you're talking to your friends. They're like, Marlon, what do I do right now? What are you telling them?
Yeah, good question, because that is obviously the question everyone has. And the first thing I'll say is, remember 2001 during the dot-com bubble, or actually 99, 2000. And then remember 2001 during the 9/11 crisis, and then remember 2008. All those times is when everybody said, woe is me, the world's gonna end, this is different. Well, no, it's not. These things happen. If you need money now, take it. If you honestly really, really don't, then you're okay. You see losses in your statements on paper. That's just it. They're losses on paper and they're not realized until you actually do something like sell. That's when you've got a true loss. But right now it's just on paper. Those folks that stayed in, and I know it's tough. Those folks that stayed in the market dropped and bottomed March 9th, 2009. Since then, your money has tripled. So remember that. And this also, back then in 08, I was fearful just like everyone else because I was relatively new to the industry. And people and colleagues were wondering, is my firm gonna survive? Am I gonna be around? And several firms weren't. There was no more Merrill Lynch. It became part of Bank of America. Which was shocking to say the least. And I'll never forget, because I was in the midst of a hurricane in Houston. So one of my clients had to tell me that we purchased Merrill Lynch, and I thought he was crazy because there's just no way. So that was then, but this is not economic driven. This is a a health crisis of which we've never seen, but we know that there's going to be a vaccine, so we're going to come out of this. And there's no firms that's going to go under as far as financial firms, small businesses possibly, but financial firms, they're not going anywhere. So this is totally different than '08. I think when there's a bounce back, it's going to be pretty huge. So I would say, similar to what Jatali was saying, stay in. If you need cash, take your cash, but don't do anything. Don't do anything to affect your long-term future that you're going to regret.
Got it. I have a question. I'm going to pose this to Jatali. So, you know, we haven't seen times like this, certainly not this significant, but the closest is 2008, right? During the recession, during the downturn. So what should we be mindful of? Because we definitely are in a recession. We may even be heading towards a depression, but, you know, let's hope that doesn't culminate. But what should we be mindful of and be prepared for?
Well, one of the first things is budgeting. I think it's really important that people understand the power in budgeting, because, you know, even something as simple as you might have gone to Whole Foods before because you liked everything organic and you liked the $10 thing of milk. Now you maybe should go to a local market that has better pricing that might be $5, and it might still be organic, might not be a brand that you like, but just being mindful of our budgets and how we're spending. Especially now that we're under a quarantine, which is, I think, the first time in my lifetime, definitely, that I've ever seen a quarantine, and in the US. So I think that it's very mindful that we're keeping that in mind as well. So even when we're selling, like let's say in real estate, for instance, I'm telling people, being mindful of who you're selling to and what investments you're taking. Because a lot of people in 2008 actually started to buy. Anytime there's a recession, it becomes a buyer's market, not a seller's market. So right now we are in the same space where it's a buyer's market in real estate, not a seller's market, which means if you are going to buy a property, and let's say it's going to be something where you want investment property, you know, I was telling, we had a conversation, I was saying it's important to be mindful that this is a time where you buy in a landlord-friendly state, not a tenant-friendly state, which I know we'll go into real estate a little bit further later, but that's one of the main things I would tell people is you can invest, but you have to be more mindful of what you're investing your money in. And also it's important to have physical commodities besides stocks. You know, rather it's an ounce of silver and an ounce of gold. Oftentimes when there is a crash in the economy, you'll notice it goes back to a gold standard, which is, you know, silver ounces and gold ounces and physical bullions, which are actually where a lot of other countries and this United States government, you'll notice that that tends to be a base. So if you look at that, even between 2008 to now, gold came from $1,200 to at one point $2,100. So people who were investing in it at $1,200, $1,300, they were able to then at one point sell it at $2,100 before it came back down to averaging $1,700 right now. So you know, those people made a nice profit. And you know, if you have less money to invest with, then silver at one point was $12, then it went up to 40 something dollars in that year, in that time frame of 2008 to now. So now when we look at silver, and silver is averaging $17 to $20, $19 or so, and it's fluctuating, if you might not have $1,700 for an ounce of gold, but you might have, you know, money for an ounce of silver. So those are physical commodities that you can utilize as well.
That's great. Okay, so I love this because we're getting some great advice if we have extra funds of what we can do with them now. How we always hear the term that the rich get richer during these times. Let's rewind for a second and go back to talking about, you mentioned shopping at a local grocery store, not going to Whole Foods. I would love for you to both give us your input on what are some practical tips and tools that we can start with right now. Marlon sent a wonderful list that we're going to share with everyone after this call that has things like call your mortgage company. So before we get into what we can do if we have money, let's get into and spend some time talking about what we can do with what we have and to be more secure and safer right now during these uncertain times.
Is that
So
for me?
yeah, Marlon, if you want to kick us off, because you sent us this wonderful list that we're going to share, but just touching on some of the most important things from here. That tip about calling your mortgage company and credit card companies, please expand and share there, because that I was like, I have not done that. So want everyone else.
Yeah, yeah. They're actually expecting your calls, so go right ahead. But yeah, you can in many cases get them, especially Bank of America, and I will, having worked at Bank of America Investments and been a part of that organization, I will say I'll give them big kudos for what they're doing. One thing Monahan, the CEO, said is that no one there was going to lose their job, so that's awesome. And they are um, helping individuals if they need to skip a mortgage payment, possibly two, I believe, one or two. But many companies are doing that. My credit union, for instance, and I put this in my example, they hold my auto loan, and they have um, a form that you can fill out on screen that or online that says if you want to skip 2 months, you can, but you got to look at the fine print. In that case, it's going to be added to the end of the loan, which is understandable, but there's also going to be fees and interest added. So in my mind, I decided against that. But then one of my buddies called me literally this morning saying that, hey, you may want to look at that again because they waived that issue on the fees because they probably got the same feedback that I did, that I'm not doing that. So yeah, call your mortgage company, call your whoever has your auto loan, your credit cards. They're expecting your call. They will probably allow you to skip 1 or 2 months of payments.
Can I add one thing to that? Be mindful to say that it's in regards to COVID-19, because I also know that they're not allowed to usher you to mention COVID-19, but they're really, some of them are only honoring it if you mention that you are impacted by COVID-19. Rather it's less funds or you've lost your job, the list continues. A lot of these companies are only honoring that if you mention the word COVID-19. So just be mindful of that as well.
Okay.
Yeah, speaking of those who are somewhat gainfully employed but may be laid off or on furlough, what might people be thinking about that they need to inquire to their employer about what they can be doing around their IRA or anything else, unemployment? I'll direct that to you, Marlon, and then anything that you may want to add, Jatali.
Yeah, one of the things in the CARES Act that people, I'm surprised, hadn't been talking about is that you are able to access your 401k or your IRAs for money if needed, and you don't have to pay that back for 3 years. There's not going to be a penalty. There's not going to be any tax ramification, and you've got 3 years to pay that back. Doesn't matter what you do with it. You can take it out to pay rent, mortgage. You could take it out to help another relative that's in need. You can do whatever you want with it. There are no stipulations. So that's something that I would definitely check into. Now, don't do it if you don't need it, because that money that's in your 401k right now is compounding, and understand you've got it in there for the future, not for now. But if you absolutely are at wit's end, you don't have a job, you've got to pay for specific things, or you're gonna be in trouble, then yes, but don't just frivolously pull it out.
Yeah, very good. So we have a question from the Tax Diva. Tax Diva, I don't know if you are able to, but please unmute yourself and tell us your name and your question. Okay. Maybe she may be having a hard time. So while we wait for her to unmute or put her question, you can also put your question in the chat if you're having an issue. We had a comment from Nicole who mentioned that that's what she did for her car. So can we talk a bit about, we know this about our credit cards and about our mortgages. What about our car loans? Because that can also make up a large part of our monthly expense.
Jatali?
So there are two different things that are happening right now. So especially with the stimulus and the government bailouts of some of these companies, not all companies and not all divisions are going to be honoring this. So for the car loans, I've been told that some companies are doing it, but I'm not sure if all of them are doing it, because I did have a couple of people who did have kickback from it, and were basically told, oh, you still have to pay all your car insurance, and certain things like your car insurance and certain things are still mandatory. And to add to that, like, let's say we're talking about real estate, how we're calling, if you have a mortgage and you want to ask for an extension. So if you're in a modification, so I had a few people who are currently in modifications right now. Legally, right now, you are still obligated to pay your modification. It could be $1,900, it could be $3,000 a month for your modification to keep your home. And they're not giving people who are going through COVID-19 stress as of right now, and as of yesterday at least. Maybe today something might have changed, but as of yesterday, they were not allowing people who are going through modifications, people who obviously might have needed a little bit more help, to do any kind of delays. The only thing that they're changing is, normally for a modification, you have to mail in your payment, but the only change is that they're allowing you to call in payments. That was their only way of helping people who are going through COVID-19 stress. So that's something to keep in mind. Do not think because something is happening right now that everyone is being lenient. Not everyone is. Same for the IRS. If you were in the middle of a payment deal with them, the IRS is only allowing people with back taxes who literally have been laid off to renegotiate their terms. But if you are in a deal with them, the IRS is kind of like, well, you're already in a payment plan until you're completely laid off. If you're receiving unemployment or anything of that nature, they're expecting you to continue your payments, especially if you average a certain amount of money. So with that said, that's one. And someone mentioned the student loans, and just to add to that, yes, right now a lot of student loan companies are doing, 0 to no interest. If you do have the funds and you have more money to put towards these principles, where the money is actually going towards the principal, this would be the perfect time to do so, because you're actually paying it down quicker, and you're chipping away at some of that debt in reality. And if you could pay it off right now, perfect time to do so.
Great. Jatali, we had a question about precious metals. So I'm going to pose this question to you, and then Michelle's got a question on business owners. And I know there are a lot of business owners in here, and this CARES Act and everything that's out here. So we'll move on to that after we talk a bit about the precious metals. Victoria asked, how do we know the world's consumer behaviors regarding the value of gold will continue to grow?
So once again, as a finance professional, I always have to give the disclaimer that nothing is written in stone. All we can go off is the past, and we learn from our history, right? In the past, one thing which has always been consistent is that most governments go back to the gold standard. It always, 2008, 2000s, for as long as I can remember, that has been a constant in our economy. And, whether the dollar fluctuates or not, rather there's hyperinflation in other countries, certain things are a constant. Up until this point, gold, silver, certain things have been a standard, have been a constant, which is why I mentioned those two in particular. Some people will take this time to invest in oil and certain things, gas and certain things. Certain things are standards that aren't really going anywhere. To me, my personal opinion, those are two standards that aren't going anywhere. Because in the past, every time that there is financial distress, those are two things that it usually reverts back to. So unless we have a completely new currency that's going to be like a world currency, and they're going to take it out completely, that's something that's always been a constant. So that's the reason why I mentioned those two, but that's just my personal opinion going off of the past and what I even see happening in the present.
I see that even Lewis made a really good comment for those who may have federal student loans, that considering that interest rates have been waived, if you're able to make a full payment, it'll go 100% towards your principal. It's a good point, Lois. Thanks for sharing that. Yeah. So as Amber mentioned, there are many of us on the call here who are entrepreneurs and business owners. So I'll direct this question to you, Marlon. There's a lot of information coming at us in terms of what resources we can go to for, supplemental income and grants and loans. If you could narrow it down, what 2 or 3 things should we, or resources should we really be going to for some sort of a supplement to carry us over?
Well, first of all, I would, because they are making it, they are in essence giving us money, they being the government, I would access that. So the EIDL for sure, which is the emergency, I forget what the I is, disaster loan, and then the PPP, I would apply for both of those. And if you're not sure, there are experts in your town that are familiar with it. And if you don't have any, then I've got a couple down here in Houston that would love to talk to you. But I would definitely apply for that. And then also one thing I mentioned yesterday is that business owners should use life insurance more so than they are. And that's not just because it provides a death benefit, but it also can help with tax-free planning. You need to have a buy-sell agreement in place in case something happens to you or your partner, and a portion of your portion can be bought out by the insurance if you were to die. So that is a critical piece that people don't think about. So I wanted to add that too.
Mm-hmm.
Thank you. That's great. We have these financial vehicles in place, and these untraditional ways of being able to use them. This is just such great knowledge. So thank you, everyone. You're putting your questions in the chat. We're going to take a couple more questions before we move on to talking about investments in real estate more, because I know a few of you have questions there as well. So I'm going to go ahead and unmute, or Nicole, if you can go ahead and unmute yourself. Nicole Nguyen, you have a question on credit cards. Mm-hmm.
Yes. Hi, everyone. So I had a question. I'm in a situation where I do still have a income coming in. So I'm not an entrepreneur or small business owner that's being affected. I'm being affected in the sense that my overall money is reduced, just not what I'm used to. So in regards to paying credit cards, do you guys recommend, I don't feel the strain that I can't pay them the way I normally have been on a plan to pay them off. I have 0% interest. So I have this like 6-month plan. Do you recommend still staying on that plan? Or I have this fear that I'm gonna want cash. I have a thing about freeing up your cash and paying it towards credit card in a situation like this where I might need cash. So what's the recommendation? Do you just pay the minimum or not worry about it until you feel that there is a problem? Or what are your thoughts regarding that?
Yeah, to the extent that you don't have to pay it and you're not going to be penalized, then don't, even though you can. And just like you said, right now it's important, if you've got dry powder or cash, that you put that aside. Whatever amount that is, I can't tell you how much it is, but whatever that amount is that makes you feel comfortable, do that. Now, I would say don't put it in the bank because you're not earning anything, but that's a whole nother conversation. People don't realize that you can put money aside with a broker. We've got some vehicles or some places to put the money where you're earning 2 and 3% and not really risking your principal as much as you might think. So that's another side piece. But if you don't have to pay the credit card and they give you some options that won't penalize you, then don't. Save that cash and build your reserve. As I said, whatever that amount is to make you comfortable. And once you hit that, then start putting it towards whatever plan you had in place previously.
And to add to that, so one of the things you can have a conversation is reach out to your credit card company and ask them if they have any zero interest deals or anything of that nature going on, because the interest is really what kills us, right? So some credit card companies are not waiving interest. If your company is not, and you are able to pay a little bit more than above your minimum payment, I always say to do so, because in a long term, depending what your APR is, it can impact you. Another thing is if you have good credit, I'm not sure your credit limit, but you can always, depending what your credit was when you first got your credit card, renegotiate. If you do have an APR, renegotiate to have it lowered and tell them, hey, my credit score has improved. Can you please lower my APR, so that if you are making, minimum payments, it's perfectly fine because your APR is non-existent. It might be at 13% versus 24%, depending, or 21%, depending what your credit score was when you first got your credit card. And that's one thing to keep in mind. It's the perfect time to start building your credit, and aggressively build your credit and use that as a time to do so. But yeah, keeping as much cash as you can is amazing, is key right now.
Great. So we have a question about small business owners who file for unemployment and also for PP, the question is, can small business owners who file for unemployment also apply for PPP? Are either of you aware? This CARES Act and all this information that we're getting right now, it's hard to keep up with all of it. So
I know a couple. Marlon?
Go ahead. No, go ahead, Jessica. Go ahead.
So you can answer PPP first. That one I don't know. I was going to just mention a couple that you can.
Yeah, the PPP is for small businesses. So is that what the question is? Can I, as a small business owner, was that the question?
With unemployment, Marlon.
Along with unemployment,
yes.
Yeah, apply for everything.
Exactly what I was going to say. So the Small Business Association, SBA.gov, and grant.gov, a lot of the major grant websites, they are allowing people, even if you are on unemployment, to also apply for their grants. Even companies like Shea Moisture is doing a promotion. The list continues. Amber, I can send you a list, Excel sheet that someone gave me with a bunch of grants. Like I think there's at least 30 or 40 of them on that list. Potential grants that people can apply for, but a lot of them are allowing people, even with unemployment, to do so. It's more about how your business was performing before, or their potential performance, versus how they're performing right now.
Got it. Yes, please do send that list. We'll be happy to email out additional information after this call, because I know there's so much that we could talk on, but unfortunately we just have an hour together today. So let's move on to talk about investments and real estate. So starting back with investments, we talked about that. A lot of people are asking, what the market has crashed, with everything being down, that's for people who've already invested in real estate, then that's bad for the stock that they have. But for people who haven't invested or who are looking to invest in real estate, they now have the opportunity to buy stocks while they're down. So what is your advice around, you've got some extra money and you want to look into the stock market? Where do you start? What do you do?
So the first thing I say is stop listening to family and friends. That's number one.
Why is that? Why do you stop listening to family and friends?
Because they don't have any money, so why would you listen
to
them?
Not everybody. Some may, but we got the message.
Okay, so the one or two that do, yeah, I'll listen to them. Okay. But even if so, let's say that I'm kidding, but then I'm not. Let's say that you do have a very successful family member that you trust and believe in. Great. Listen to, talk to them, get advice, but it doesn't hurt to get a second opinion. So if you've got someone, a financial advisor, financial planner, someone that you also know and trust, then talk to them too, and then you'll have either confirmation of what your family member said, or you have a different viewpoint that you can maybe bring back to that family member, and then they can explain it to you. But what kills me the most is that we we listen too much to people who don't have, and it affects us going forward. It makes us more frightened than we should be. You know, people in their 30s and 40s, none of this should scare them at all for long-term purposes, because you're going to go through probably 5 or 10 more of these before you retire. Those that are older, you want to be a little more careful, but still don't panic. The stock market is on sale. This is one of the only areas I mentioned you guys yesterday where people tend to not buy things on sale, but the stock market is on sale. Apple is down, Google is down, Facebook is down. All of the Walmart, all these stocks are down. So buy them, get what, put your investments in now, and take advantage of this. If you plan on putting in $5,000, don't do it all at once. Do 25% now. Wait a week, wait 2 weeks, wait a month, do 25% more, and just dollar cost your way into it. You don't have to do it all at once, because this might be the bottom, but it may go even lower. But also understand that right now you're actually not getting the best prices, because the market was up 10% last week, which was the most it's gone up since the 70s. So it's we're coming out of this, and if you want to get in, then do.
So to add to that, I want to explain to people, a lot of people, especially if you're new to the investment world of stocks, look at the stock market as an emotional human being that goes off of the energy of the masses. And what I mean by that is, emotionally, look at, like, let's use Amazon, for example. Everyone likes Amazon. They're getting their stuff to them, even though there's so many bad things happening in the economy. And then one of the workers did mention that Amazon wasn't really protecting their workers. And then everyone in the media was like, what? This is horrible. And then even Amazon, although they were outperforming most companies, their stock started to lower. So when you're investing in stocks right now, you need to look at it from an emotional stance and look at the media, look at the news. You need to start, rather it's going on, Seeking Alpha, The Street, Market Watch, CNBC. Those apps, those companies are constantly talking about what's happening in the media and news. If there's a stock that you're going to invest in, let's say you do purchase a stock, what you should do is get a ticker and save an app that also notifies you every time a news article comes out about that company. I mention that because guess what? If it's an emotional person and the masses start to not like it, then it starts to lose interest. People start selling it. Whatever's happening, if something bad, people might start selling. If it's something good, people are going to start buying. You're doing a good investment, right? Another thing to keep in mind is that you need to be mindful, if you do have stocks already, what companies are filing for bankruptcy. If a company files for bankruptcy and you own shares in that company, if it does go bankrupt, if it does get approved, then you lose all your shares. So it's very important for you to also understand in the stock market that if you do have shares in a company and they file for bankruptcy, it might be time to sell that share in that company, and be mindful of making a loss. Marlon, feel free to step in if you want to back up anything I'm saying, but I think it's really important that you be mindful. It's also emotions. So if it's a company that you're like, you know what, I like how they're handling this crisis, I like that they're helping people, or they're making more donations, there might be other people just like you who are watching that and saying, I like where this is going, and they're going to be investing in that stock as well. So that might be a way for you to determine who you want to invest in. And it's one of the best things, honestly, even when I worked in investment banking, as a person who helped people with multi-million-dollar portfolios, billion-dollar portfolios, the main thing is really just looking at, how does this company perform? How do their press releases, reading articles that they're releasing about the company. And that's how we kind of know where to invest next. What kind of numbers do they have? Are they private? Are they, do they have dividends? The last thing before I stop talking about stocks is, if you're investing in a stock, I think it's really important to hopefully have stocks that give you residual income, which are dividend in stocks, right? So dividend stocks, basically, whether it's quarterly, monthly, or yearly, just because you own the shares of the company will also give you money as well as a shareholder. It could be 69 cents per share. It could be $1 per share that you get quarterly. So if you have 1,000 shares, that's an extra $1,000 coming to you just because you're a shareholder. So this might be a perfect time to Google dividend stocks so you can see which companies will also give you residual income just for owning them.
Yeah, great points. On that last point, companies like Johnson and Johnson, J&J, Apple even pays dividends now. The oil and gas firms, ExxonMobil has a history of paying dividends. That's where a lot of elderly folks will not give up their ExxonMobil, boy. Trust me.
And I'm sorry, Marlon, were you done?
Yeah, well, I wanted to also piggyback on you were talking about emotions. That's what drives people into doing things that are not advisable. Let's just say that's the nicest way I can put it. We as professionals, whenever I talk to someone and they want to do it themselves, which is fine. If you got the time and the energy and the capacity to do it yourself, that's fine. But I know every time I'm going to beat you because you're emotional and I'm not. I think long term and you think
short term
and way too short. So it's no, you can't beat the market, period. Go ahead, Jatala.
Yeah, and so that's also something to keep in mind is that when you're looking at the media and where everything energy-wise is going, there are short-term stocks that are going to do good because there is a crisis, and then there are long-term stocks. So when you're doing your research, rather you're going to have a person on your team who's a professional doing it for you, or if you decide you want to tackle this yourself, keep that in mind that some stocks are going to be short-term stocks that are only going to really be doing well during this recession or during an economic issue. And some of them might be drug companies that might be making a prototype to help with this problem, a vaccine. But then some of those companies long term, they're not going to be around. So that's something to keep in mind, that even when you're watching stocks, you might put a notation next to the stock that you like if you think this is a short term or long term. So one thing that people do, a trick in the industry, is companies that were doing good before this situation happened, people will watch that and say, okay, do I feel like they'll be around again after this is over? And they'll buy it while it's low now, because when it goes back up after this is over and life returns to normal, then you would have invested in something that was doing really good. And that goes for, like, for instance, cannabis stocks. I see the symbol, so I'll stop right there, but that's something to keep in mind for cannabis stocks.
So it's just, we could go on and on about this because it's just so meaty, and I know that you know so much, and maybe we'll do a part 2 of this. You guys let us know what you think, because we've just got about 14 minutes left, and we had a question come through about, you mentioned cannabis stocks, so this may be one of your answers. Nicole asked the 5 top stocks to invest in right now, and I know that you have to give a disclaimer and say that whatever your financial disclaimer is. So if you can answer that just really quickly, just without detail, the top 5 stocks that you would recommend if you're able to make that recommendation, and also where to invest in stocks. Like, I personally use Robinhood, and is that somewhere that you would recommend for people that don't have someone else who's going to take care of this if they do want to handle this on their own?
So
well, understand, Robinhood crashed twice, remember?
I didn't hear you, Marlon. What did you say?
I said, remember, Robinhood crashed twice during this financial downturn. So keep that in mind.
Robinhood is a newer platform, so it wasn't necessarily ready for all these. What happened was a lot of people were trying to sell their shares of stocks, and Robinhood couldn't handle the influx, and it crashed more than once. So that might be something to be mindful of. So the 2 apps, once again, these are my personal opinions. I'm not getting paid to say it. If you need fractional shares of a stock, in case someone doesn't know, is, let's say Amazon is at $1,900 per share. You might not have $1,900 to put into a share, but you want Amazon that badly, and you have $500. Fractional stocks companies will allow you to buy a portion of that. Not all brokerages will allow you to buy a fractional share of a stock. So one of the fractional companies that I mentioned, which I tell people you can use, a stockpile. Stockpile allows you to buy fractional shares and not necessarily have to buy the full share. And it's an easy platform to utilize. I use this in the school system with kids all the time. Another company that I would suggest is TD Ameritrade. It has one of the easiest platforms to utilize and allows you to buy full shares of stocks. So the negative thing is you can't buy fractionals on TD Ameritrade. But it's a zero transaction fee when it comes to basic stocks that you're purchasing. So one thing to keep in mind when you're getting a brokerage, if you're investing by yourself, is some of them might charge you $5 per share of stock that you're purchasing. So that be mindful of that. And so to answer your question, my 5 stocks that I would mention, I won't give specific names, but I will give you apps and companies that I would suggest to look into. REIT, which are real estate investment trusts stocks, which is basically, some REIT. Definitely Google REITs. You can basically be buying shares of, like, let's say a hospital. And hospitals aren't going anywhere. If anything, they're increasing right now. So you might be buying in the land and investing in the stock world of real estate versus actual real estate. I also cannabis stocks. So if you're interested in cannabis stocks, I would say NCV News, which is New Cannabis Ventures News, which is a very good app. Will let you know about IPOs in the cannabis world, what dispensaries, hemp, CBD oil companies. The list continues. Everything that has to do with that world. Those companies are companies that I'm investing in. And some of them are basically at 18 cents or $2-3. So that's something to keep in mind. And I would also say looking at dividend stocks. So those are my top 3, I would say, is looking at companies that give you residual money back as well. And then for me as well, I would add in like gas and oil companies, or companies that I feel like long-term are usually around, and medicinal companies. So if I was to say, I would look at what company might actually have the vaccine, whether it's in Canada or the USA. I personally feel like the US will be the first company countrywide that will release a vaccine for COVID-19. So companies who are aggressively already starting to test it and market to people are companies that would be great for you to look at. Is, who's claiming that they're going to be the first. So rather you're looking at the Science Journal or just a regular news articles, that is a good place to start as well.
Great. I love that we have you both here because it's always interesting to have the different perspectives. So Marlon, what would your top 3 or 5 be?
So as a financial advisor in a very regulated environment, I can't give you specific stock. However, if you call or email and we set up a separate discussion, then yeah, we can do that. But I would suggest also those platforms like TD Ameritrade and that type of thing. If you want to do something on your own, but for your long-term money, your retirement, your 401k rollovers, all that kind of stuff, that's where I would give it to a professional like myself, so we can take care of that, and then you can, quote unquote, play in the market with those other apps. Jatali mentioned something about hospitals and cannabis companies. Many times you're not sure which one of those is going to take off. So it's good to look at the ETF. ETF is an exchange traded fund. It trades like a stock, but you may look at the a cannabis themed ETF that will invest in a basket of 10 or 20 cannabis companies, or ETF that follows hospitals, and you may be investing in 10 or 20 of those with that ETF, so you don't have to go out and choose a specific hospital and that type of thing. Jatali also mentioned REITs, real estate investment trusts. Those are good. Those are what we call alternative investments. They don't fluctuate or they're not correlated to the market. So just because the market is down, an alternative investment may very well be up substantially, or it may be flat. The market may take off, 20%, and an ETF or an alternative investment may be up, 5% or so. But it's non-correlated, so that's also good to have in your portfolio. None of these places you want to put all of your money, but you want to put some just to diversify.
And I love
And
that.
also keep in mind, oh, I'm sorry, can I say one thing, Amber?
Yeah, sure.
Keeping track where the government laws are going. So like for cannabis, it's not federally regulated it yet. So some people think it's a saturated market, but it's not yet because it's not even federally regulated. So when you're looking at Bitcoins and cryptos, people are telling people this is the perfect time to invest in cryptos. But keep in mind, when it's not federally regulated, that means if you do lose your money in it, FDIC, there is no insurance protecting you to make sure your money is right. So with cannabis stocks, they're legal in certain countries like Canada. So app like TD Ameritrade will allow you to purchase stocks even outside of the country that are legally protected. And FDIC and the platform will still protect you utilizing certain platforms. So that's also another thing to keep in mind, because when it's not federally regulated, that lets you know, well, where are the laws going? So if you see that the government, when you go on congress.gov, they tell you every law that gets passed. So if congress.gov says, hey, we just federally legalize this and this is what's happening, that might be the perfect time to then invest before the market becomes actually saturated and everyone's investing in it and you don't know which companies are going to take off.
Oh, that's really great info. Okay, I want to move us along to talk about real estate because we could spend so much time on this. Jatali is a financial literacy expert and she has a company, Kids Who Bank. We're going to talk about where you can find Marlon and Jatali at the end. We've just got a few minutes left and I'm going to ask you guys, Marlon and Jatali, if you could please put your contact information in the chat. We'll also follow up with it in an email, but I'm sure that people will want to continue to get in touch with you and use your services, hopefully hear about your programs and possibly ask for more advice. For now, we got some real estate owners on the line and I've got a couple private messages coming in with questions. So if anyone has any specific questions, ask please, but I'm going to kick us off for a 5-minute brief conversation on real estate and ask, if you are a real estate owner, is there anything that you should be doing now to protect yourself or to take advantage of any of the programs that are in existence now?
Marlon, you want to tackle first?
I was cut and pasting my contact information, so I missed it.
So Jatali, you kick us off, and then Marlon, you'll come in. But I just asked a question about real estate. I'm going to ask about investing, but just starting. If you already currently own real estate, we know that you can call your bank and ask for a break on your mortgage. Is there anything else that current real estate owners should be taking advantage of during these times?
So one of the things that I always tell people, if you own real estate, rather you're an investor, because when you say investor, I'm thinking you might have tenants or you might have a property that you're about to sell. So one thing that I would definitely keep in mind right now is taking time with yourself and not rushing the process. And what I mean by that, especially if you have a property that you're about to sell, if you should have a number that is your minimum loan number that you will accept for the property, and then you should have your goals, right? If you're not getting that minimum investment back and you are in a position to hold on to the property, then hold on to it by all means. But when I say hold on, be mindful of your budget once again, where you're going back to what is going to be the long-term goal of holding on. If I have to hold on to this for 1 year, financially, can I afford to hold on to this property for 1 year and be the one paying all the expenses? And that goes as well if you're a landlord. So one thing I'm telling people is keeping in mind, if your tenant decides that they cannot pay you and the government's not giving you, because one thing that the government is doing is, if you are a landlord, they're giving you money to help offset, or they're giving delays in paying the mortgage so that if you have tenants, they don't have to pay you. But some companies or some people that I know that are landlords are having issues where they haven't got the money from the government yet, and maybe they haven't got the delay yet, but they're expected to give a payment, and they're in this awkward position of the waiting game of when are we getting a kickback. So right now it's hard to answer the question just because everything's happening and developing so quickly and certain things are not in place yet. But on the budgeting side, what you can do is make sure the only investments you're keeping right now are ones that you can financially hold. Same for if you are going to invest in something new, don't purchase a new property unless you know that you can handle the one that you live in, the one that is going to be your investment, and whatever your second and third investments are going to be. Because one thing I've seen in 2008 was somebody who purchased 4 properties at one time because the price was so cheap, but she just assumed that she would be able to sell all of them quickly. Cannot assume that you'll be able to do so, especially when it's a buyer's. When they say buyer's market, doesn't mean, oh, buy something cheap and sell it. Buyers are trying to actually buy them as cheap as possible as well, just like you are.
Thank
Oh,
you for
and
that.
auctions.
Yeah. So I want to be respectful of time. Marlon, maybe so Jatali, you answered that question in such fullness. Marlon, can you speak to real estate and any advice that you have, and then we're gonna close out. And it sounds like we may need to do a part 2 of this, guys, but we'll see.
Yeah, see, I told y'all yesterday we would probably have to do part 2.
Yeah.
No, I'm not a real estate guy, so I'm not going to pretend to have that type of expertise. My clients that want to dabble in flip homes and do things like that, I don't discourage, because there's, if you're making money, do it. I would suggest not to put it all in one basket, obviously. But no, I've got absolutely nothing against the real estate side to go with your investment side.
So can I add one more thing then, Amber?
Yes, I concede my time to you.
Yeah, so the last thing I will say is it's also a great time to utilize, even especially during quarantine, online real estate auction websites, even if it's something as simple as auction.com, where you can purchase properties in almost any state, from Detroit to Florida to New Jersey. And you can put in the area that you like and look up at real estate prices, as well as if you're a real estate, let's say an agent, and you know about how to make the calls, or even a real estate investor and you know how to perfect your script, make the calls. A lot of people are stuck home. I have gotten so many properties, like pre-foreclosures and foreclosures, by going on acris.gov. If I'm not mistaken, it's acris.gov or acriis.gov. But when you go on acris.gov, it gives you everybody who's either purchased a second mortgage on a property, who has a pre-foreclosure or has foreclosed on their properties and it's not completely out of the system. Sometimes those people still are going through issues with the banks. Those people, create a list and call them. And if you do have investment money, it's a perfect time to go to acris.gov and see who's financially in distress and give them a call and say, while you're stuck home right now, would you like to sell your property for $20,000, $30,000 to me, since you only owe $15,000 on it? You're still making a profit of $15,000. And that property, do your research, and acris.gov gives you the value of the property as well. So that's one app that I would definitely tell people to utilize to help you even in knowing where you should invest.
Oh, this is awesome. My God, I gotta spit it right about now. There's so much rich information that we've gotten from both of you, Marlon and Jatali. We are so appreciative. So here's what we're gonna do. We're gonna wrap this up because we wanna be respectful of everyone's time. Really quick, we will be posting the replay of this. So when you get an opportunity and you haven't captured everything that's been said, you can watch it again, take some copious notes, and really apply a lot of what our subject matter experts have shared with us. We're also going to be posting, a recap in terms of sort of specific tips and takeaways. We'll try to distill it down so that some of the, real key points are in writing. We want to invite so many of you who have been with us for the last several weeks that we're going to be doing this ongoingly every Wednesday. Next week, I think, Amber, we've talked about, you and I sort of speaking about breaking bad habits. This sheltering in place has just turned our lives upside down, and so many of us are immersed in habits that, are just not healthy for us. So I think we're going to be talking a little bit about that. And then in the next 2 weeks from there, we'll probably look to talk about what to do in this economy relative to job search. A lot of people are pivoting, trying to figure out what's next. So, stay tuned because we have a lot of rich stuff coming your way.
You're sheltering in place, which means you're not driving a lot, which means you need to call your insurance company for a discount because you're not
demanded.
much
Don't
of a
ask for it,
threat
demanded,
anymore.
right? We got it.
Yeah.
Yeah.
So thank you, everyone. This was such a full session. We hope to see you back again next week and in the following weeks. And just another thank you to Jatali and Marlon. You guys are just so genius and so full of information. Jatali, we did not, if you can just say, we got Marlon's information in the chat. Marlon, thank you. If you guys want to go and cut and paste Marlon's info, we'll also put it in an email. Jatali,
can you please teach me how do I put my information in the chat?
Well, I'll just ask you to say it because we're going to hop off in a sec. So just say it. I'll type it as you say it. So how do folks reach you and learn?
You can email me at info@kidswhobank.com. And if you're on social media, from Instagram to Facebook, those are the platforms I utilize. In YouTube, you can go at Kids Who Bank, which also, if you look at my name, I wrote it there next to my name, Jatali Bellington. And feel free to email me. I try my best to respond to my emails within 1 to 3 business days. I'm actually teaching online classes right now for school systems, so it might not be 24 hours, but within 72 hours, I try to reply to everyone.
Great. All right. Thank you so much. So everyone go out, be safe. Together we'll get through this. We'll see you next week on Wednesday at 12:30. Take care.
Thank you for having us.
You're welcome. Thank you, everybody.